Welcome to Cocktails and Closings, where real estate meets real conversation. I'm your host, Eric, blending my world of real estate and mobile bartending to bring you the perfect mix of lifestyle, business, and a little bit of luxury. Whether we're pouring up drinks or closing deals, we're all about elevating the experience. Let's get into it. What's up, everybody? Welcome back to Cocktails and Closings. This is episode 3. So I want to again thank all of you for tuning in. I want to thank all of you for listening to what I have to say, because you could literally be doing anything else. So I appreciate everybody tuning in. I appreciate everybody's support, the feedback, the comments. It's all appreciated. So again, thank you for tuning in. So today we're going to get into our episode. So on today's episode, we have a lender, which is a first. Well, we're only 3 episodes in, so which is a first. So first lender that we're having today. So I would like to introduce Mr. Francisco Guerrero of NEXA Mortgage here in Merced. And I'm going to kick it over to him. I'm going to let him talk about himself for a little bit.
So a little bit about myself, Francisco Guerrero from NEXA Mortgage. We are a mortgage broker. We have opened our doors since January of 2025, so we've been in operation for over a year now. But originally the team is the same team that moved over from Gold Star Financial. We were a retail bank off of G Street in Merced. And
next to Rayleigh's, right?
Next to Rayleigh's, yes. The team there, the core has been together for over 10 years, I think. Nice. 15 plus.
Nice.
But last year, towards the end of 2024, we were getting into a unique situation with the market, and obviously we saw the changes and the challenges when it came to interest rates and program offerings for clients, unique clients too. A lot of I-10 clients that we have here in the Central Valley, a lot of farm workers, seasonal farm workers that we felt like we could have helped more had we had those offerings and options really from the other lenders. So we shopped around, and we made a couple of connections, my colleagues and I, and that's when we met with Casey. Mm-hmm. And Casey has been a Nexan for a couple of years before us, and he gave us a firsthand experience or a description of like what the company is like. Right. What do they offer? How do they differentiate themselves from other brokers? Because NEXA is not the only broker, but we are one of the biggest and fastest growing ones. And with the kind of volume we do as a branch, it really was important for us to find the right partner.
Yeah, absolutely.
Yeah, finding the right partner that could help us grow our business, but also help clients save a lot more money so that we can grow our business together like that.
Okay.
So that was the start off, and it was a journey. We got a building, which was great. We used to have a nice little office, but this time we had a building with our own parking lot. We have a lot more, we're a lot more visual to the community, because I think that's huge for us. And that kind of segues or leans into, how we differentiate ourselves as brokers.
Right.
One, we want to be able to offer every single product, feature, technology that any other big bank's doing, because you should be able to get on your phone and qualify yourself.
Yeah.
With your own information. But in the same token, I think we feel, myself especially strongly feel that in this day and age of high technology, it's very important to still have that high touch part.
Right.
And that means when you actually need to talk to your professional, that you're not going through a call tree to find them.
Right.
We have an address. You can come down to the office. It's really establishing that relationship part, because a mortgage for the most part is 30 years.
Right.
That's the most common one out there. So, if you're going to get into bed with someone for 30 years, you want to make sure you have a good relationship with them. You've established trust, mm-hmm. and also guidance.
Right.
And having that office presence and having us in town and being the community lender.
Yeah.
We're brokers that can offer anything outside 48 states right now, but really the stuff we offer to our people in our community I think is a lot more valuable.
Yeah.
So that's what brought us over to NEXA Mortgage. NEXA Mortgage, we're a broker, mm-hmm. and we've been at it since.
Yeah.
Business have been good. We've been blessed to have great partners like yourself.
Yeah.
That's like half of the battle.
Right.
It's finding good people to work with, because You know, we
Absolutely.
can find people who want to buy homes all day,
Yeah.
right?
Right.
Everyone, that's the American dream. You know,
Yeah,
it's
absolutely.
really kind of, you know, your step to securing yourself financially for your future,
Yeah.
and finding the right people, because it can be difficult, it can be long,
Yeah.
it can be challenging, it can also be fun,
Right.
and it'd be great to have fun with the people that you trust and you want to see growth too. So.
Absolutely. So where's your office located in Merced?
Yes, we're at 2970 G Street. So for all the Mercedians out there, we're right across In Shape,
Okay.
right? It used to be a house, but we converted to an office. I think it's the second generation office there, and we love our neighbors there, and it's nice and quiet. Good space for if you're trying to host maybe class, or you want to do like a training event
Right.
for your first time home buyers or investors. We have the space to do that, and we've been blessed to be able to secure that spot and stay busy.
Right. So on today's episode, our cocktail, we're going to be making it the simple old fashioned. A little bit about the old fashioned. The old fashioned is essentially the oldest drink that is on a bar menu. Okay. This drink was established in the 1800s. It's called an old fashioned because when drinks started to get a little bit more elaborate, and you put in more fruit and more fruit juices and more garnishes and all this other stuff, you had people that would come to the bar and say, hey, I just want bourbon the old fashioned way, and that's where the old fashioned got its name. So today we are going to be making the old fashioned. Again, it's a super simple cocktail. This is the one cocktail that is essentially the test for a bartender, because it is really just bourbon, and not a whole lot of anything else. It's very easy to screw it up. So this is like the test for most bartenders. So hopefully I get this right today. I'm sure there's going to be someone that's going to watch this video and going to say, that's not how you make an old fashioned. This is how I make it. Okay? I've never had any complaints. Hopefully I won't have any complaints today from our guests, but today we're going to be making an old fashioned. So let's get into it. So making an old fashioned, you need a mixing glass. So you don't shake an old fashioned. You make it in a mixing glass, and we'll get into why. So making the old fashioned. So typically you're going to go in with a sugar cube. I prefer to use Demerara sugar. If you don't know what Demerara sugar is, it is it's essentially brown sugar, but it has more caramel notes, more apple notes. It's just a little bit sweeter than regular sugar cubes. So you go in with the Demerara sugar cube, or you can even use Demerara sugar syrup, which is not hard to make, but I prefer to use a sugar cube. So we're gonna put a sugar cube in the glass. We're gonna go in with 2 to 3 dashes of Angostura bitters right in the glass. Okay. Then we're gonna take our muddler and we're gonna muddle this up. Okay. We're gonna just squish up that sugar cube, smash it up so it's real fine. You don't want it to be chunky. You don't want to get a bunch of extra sugar in your drink. Okay. So after you smash that up, we're gonna put some ice in our glass. Okay. And we're gonna go with 2 ounces. We're using Woodford Reserve today, but you can really essentially use any bourbon that you want to use. Woodford Reserve is a very, I guess, kind of middle of the road bourbon. It's not the cheap stuff that you can get for $5 a bottle, but it's not the super high end stuff either. But it's very smooth. It's Kentucky bourbon. It's a great bourbon. So we're going to be using Woodford Reserve today. So we're going to do 2 ounces of that. We're going to go right into the glass. Okay. And then we're going to just use a bar spoon of simple syrup. We already used the Demerara sugar cube, so we're not going to use a ton of simple syrup, but we're just going to do a little bar spoonful of some syrup. Okay. And then in our glass, we're just going to mix that up just until it gets nice and cold. Mix up all those sugar cubes in there, all the simple syrup, all the bitters. Okay, so we're going to mix that up. Okay, and once we're done with that, we're going to take our rocks glass. So typically you make this with like an ice sphere, or like a block of ice or anything like that. But because we're not in a kitchen today and we don't have access to that, we're going to just use regular ice cubes today. So after you mix that up, and you're going to take your strainer And we're going to strain this into the glass like so. Nice clean pour. We're going to take a orange zest, and you like to just squeeze this around. Just get those aromas on the glass, okay? And then we're going to garnish with a cherry and an orange wedge. Super simple, guys. Super simple, but it's a classic cocktail. Like I said, this is one of the oldest cocktails that's on any bar menu, but it's one of the simplest. So again, we went through kind of how to make it. If you need any advice or any opinions on how to make it or what bourbon to use or anything like that, feel free to hit us up, Premier Bartending. I'll tag us in the video as always. Absolutely.
And curious on this one, why do you stir and not shake?
I mean, you can shake it if you want, but I mean, usually if you have just a spirit forward drink and it's usually just spirits, you don't really need to shake it. When the drink was kind of invented or made, they weren't shaking it. They didn't have shakers. Like, they were really just kind of stirring everything. So, because it's such, like I said, because it's such a spirit forward drink, you really don't have to shake it.
I see.
Usually when you shake a drink, it's because you have, like fruit juices in it, or you have agave syrup, or you have this or that, and you want to find a way to meld all of those flavors together, and shaking it is the best way to do that. It aerates it, it gets everything, mixed up. But with an old fashioned, it's really essentially just bourbon.
The bourbon
so it's
is
like, so it's like you really don't need to shake it. There's not really a whole lot, so stirring does the job.
Awesome.
So,
awesome. Well, thanks for explaining that.
Of course. Most people know, if I want to buy a house, I've got to talk to so-and-so, and I've got to get approved for a home loan and this and that. So explain to the people that don't know or that are not aware, explain to them essentially what your job is.
Yeah,
what you do in that process, and how they contact you and how they get started.
That's a valid question. So anytime you're out, you're gonna go and if it's buying a house or it's buying a car, anything, right? You need to know where you stand. Right. You need to know, okay, how do I buy it? What's it gonna take in terms of dollars? What do I need to do to prepare myself? Because most of the time you're going to a finance company to look for financing. If you have cash, there's no reason for you to be in our office because you don't need our financing. Right. But if you need financing, you need to come into talking to a lender so you can understand where you stand. Okay. Are you ready to do it today? Right. Do you need 3 months? Do you need 1 month? Do you have enough cash? Do you have enough FICO score? And we'll talk about that definitely in depth because that's a great topic. Right. Do you have enough savings? Are you buying with a program that really benefits you the most? Right. That's because I think that is where a lot of lenders differ. They are going to be different because what are they offering? Some lenders only offer programs specific to this county, or some of them can only offer down payment programs, or some of them can't. Right. And everyone has a different need. Right. Everyone has a different picture. Yeah. There's no one right answer for everyone's question here. Right. So everyone's gonna have to take a look into their finances, take a look into the situation, and I think their goals too. Main one is goals. What are you trying to achieve here? Right. And that starts with talking to a professional like us here, as lenders, to help you guys reach that goal. Right. Absolutely. Yeah. Absolutely. Yeah. So when in the home buying process, or I guess I should say, if I wake up tomorrow and I say, hey, I want to buy a house, when do you tell someone, hey, you need to sit down and talk to a lender, or you need to come in and talk to us, or, when in the process is it important for people to do that? I feel like it's important day zero, because you have a lot of folks, day zero. Day zero. There are a lot of thinking about buying a house next month. Start talking to a lender today, okay? Yes. I'll give you Francisco's number. No, I'm just kidding. It'll all be posted there. But it's important because you know how many times I've talked to clients who have the right intentions. Right. They've saved a lot of money. Right. They've stopped taking out debt. Yeah. They've done this, that, and the other, right? And then you come over to a lender after they've been working by themselves for over a year, and they come to find out that they were ready a year ago. Yeah. What does that do for them? Well, they missed out on possible opportunities to find either the right deal, the right house, or the right financing. Right. So unless you're really taking yourself seriously and seeing a professional, in that sense, then you're not really ready yourself. So I would say if you feel like you want to do it today, day zero, because it shouldn't cost you anything to talk to one of us, right? But it's definitely priceless when you understand where you stand and where you're going to go or what you need to do.
Yep.
Yeah.
Yep.
So,
and that, that kind of ties into what we spoke about on the last episode with the girls from YPN, and just having that financial literacy. And I don't think it's something that a lot of people nowadays have.
Yeah.
And I think people are, I think people are almost scared to go down that road because they think like, oh, I don't have enough money, or I'm never going to be able to buy a house, or I'm never going to be able to, this, that, or the other. So just sitting down and I think talking with the lender, I think debunks a lot of those myths that people have. And people are so kind of ingrained to think like, oh, I have to have millions of dollars in the bank to buy a house. But it's like, if you have millions of dollars in the bank, just go pay cash. Like you don't have to finance it. You know what I mean? So it's like if you're in that position where you think that you want to buy a house, or it's something that you're thinking about, like you said, sit down and talk to a lender. It doesn't cost anything. And they can kind of get you on that path to home ownership, and getting there. I think a lot of people think about, oh, well, I have debt and I have this and I have that. So how does debt factor into someone getting approved for a home loan? Like, what's too much debt? Like, what types of debt do they not look at? I mean, obviously there's student loans and things like that.
Good question.
Is that all stuff that lenders look at? Is that stuff that counts against you?
Yes.
So elaborate on that a little bit.
Yeah, of course. So most definitely. Now, everyone, when you're applying for a loan, I get funny questions sometimes. But really, you're trying to apply for a lot of money. We're talking about almost $500,000 sometimes.
Yeah.
Average prices sometimes. So everything's going to be accounted for. They're going to dig everywhere. If you have child support, even if you haven't paid it, or maybe you don't have a job on paper, you didn't have to pay it. That's going to affect you. So every single thing that's under your name on your FICO score, on your credit report, is going to be accounted for on your debt. Now, how much does that look like, right? Because I can throw that out there, but they need to conceptualize what's really going on. So in general, I would say a good rule of thumb is that the bank will usually allow you to finance up to 50% of your monthly income towards a mortgage plus additional debt. So if you have $20,000 of student loans paying $500 a month, you can basically say that my purchasing power is the mortgage payment minus the $500 because I have to count for that. So in short, yes, debt does come into play when it comes to calculating your purchasing power, but it never disqualifies you for actually buying. What disqualifies clients from typically buying is because they don't have a good enough credit history, and that's the score to qualify for that specific program. Good news though, FHA, they got rid of FICO score requirements, I think in February this year. So, tidbit to that, I mean, there are going to be pros and cons. If there's going to be no FICO score requirement there, and you don't have a 640, and that's a good number to start with, 640. Underneath 640, you might just need to have a few more things going for you. You need to have either more savings, you need to have solid, consistent time at the same employer sometimes. There's so many things under the sun to talk about. So,
So so when you say FHA, like obviously FHA is a type of home loan.
Yes.
And there's different types of home loans. There's USDA, there's VA, there's conventional, there's all these different types of home loans. So can you kind of explain to the people that don't understand what those terms mean, like kind of the difference between those home loans and which one is, and kind of rank them, like which one is the easiest one to get qualified for, which one is the hardest to get qualified for, which one has the most stipulations? Because I mean, obviously, they're all going to have stipulations. Some of them have inspection stipulations and appraisal and all that other stuff. So kind of explain the difference between those different types of loan types and what those mean for people and all that other stuff.
Okay, so those are the four you mentioned. FHA, conventional, VA, and USDA. Those are the main four government loan programs offered out there. And these are offered by Fannie Mae, Freddie Mac, and Ginnie Mae. What are those, I'm sure you heard them on the news, right? Right. Essentially, they're like banks. So they're banks that are going to help administer what the government's trying to do. Once upon a time, they used to be private companies. And then 2008 happened, and then they became, fostered by or
Right.
stewardship by the government. But they offer those main programs that have already their guidelines, and if you put them they stack them one against the other, some of them is going to have an easier qualifying window, I can say, like easier to qualify for.
Right.
Some of them have a lower down payment requirement.
Right.
Some of them have a lower out-of-pocket cost requirement.
Right.
So to determine which one's better, it really depends on your need. So in general, though, I would say if you have a FICO score higher than 750, conventional might be your route. And this is why. Because if you have a FICO score of 750, you're able to use a minimum down of 3%. That's a conventional loan. 3% is minimum down if you're a first-time home buyer. But the mortgage insurance that you're going to get charged for that, if you don't put down 20%, the rating for that is cheaper than FHA's.
Okay.
The trade-off is, though, is FHA typically has a lower interest rate to start off with. So if you look at both things, sometimes having a good enough FICO score of conventional is better. But if the market for FHA is way cheaper, and real-time example, yesterday was Friday was a 6.99 conventional. My FHA's was 6.125. So I know, I think you would still go with 6.125 if it still makes sense monthly. Right. So that was conventional, 3% down, higher interest rate. FHA is 3.5% down, a little bit lower interest rate. But the mortgage insurance is a flat rate. And then you have a VA loan. For me, VA loan is the best loan out there for a buyer. It's not exactly seller friendly because it requires the seller to get the house, really up to code, higher standard than most loans, which is good for our clients, but bad for sellers. It's harder. It's harder.
Yeah.
But I think our veterans deserve that kind of loan, and it has the best interest rate out there, and no mortgage insurance too. So it's a zero down program, no mortgage insurance, the best interest rate. USDA is another very popular one, I would say, coming back. I would say getting popular because two years ago, income limits for USDA were not progressive with the times.
Okay.
When I say that is that if you qualify for USDA, you couldn't find a house out there anyway.
Right.
So you were stuck in between a rock and a hard place.
Right.
Today, though, they've updated that, and USDA is a zero down program.
Nice.
If you're in Merced County, if you're trying to buy a property outside of the city of Merced or Los Banos, a zero down USDA program might be for you.
Okay.
Yeah, so they have a good interest rate as well, as good as FHA's, and they don't have mortgage insurance. They call it an annual fee.
Okay.
It's about a quarter of the price of FHA. So
nice.
For high FICO scores, I say conventional, veterans, VA. If you're a first-time home buyer with, like most people with a 650 or 700 score, FHA might be your best route because you'll get the best interest rate out there for it. Yeah. So I didn't answer it from top to bottom. They're all good.
No, I mean,
and they all have their plus and minuses.
Yeah. No, I mean, it's always like you said, it's always going to depend on the person applying.
Yeah.
So I mean, it's hard to say which one is the best or the worst. It just depends on the situation. So obviously, but anybody that's listening to this, if you're thinking about buying a house, if it's crossed your mind, like Francisco said, sit down and have a conversation with the lender, because he can definitely look at your financial picture, and kind of tell you which one would be the best for you and all of those other things. So please, if you have considered it, talk to a lender, and they can definitely get you on the path to home ownership. I tell people all the time, like, buying a house may not be something that you get to do next month. It may be 6 months from now, it may be a year from now, but we can at least get you on that path. So definitely, if it's crossed your mind, sit down and talk to a lender about it.
Yeah,
for sure.
And for the ones who already bought the house, so this is where they assume that when you buy your house, your financing is done.
Yeah,
it's not done. That's why we build these relationships with you, because we're trying to secure your house in the beginning with good financing. It's not going to be the best finance, especially in today's world that we're going to see. Yeah. We're kind of on the higher end of rates. So it's planning that next step and then planning that next step. It's really like life planning at that point. Absolutely. And that's why you want teams like people like you, like people that can understand that and really help set you up for success, pointing you in the right direction.
Right. Yeah, for sure. How, you know, while you were talking about the different loan types, you obviously talked about interest rates and things like that. And that's being a realtor. That's the one thing that we always hear, like, oh, I want to wait for interest rates to drop, and you know, I want to wait for interest rates to be 3%. But it's like, bro, it's never going to be 3%.
Send them to my
Like,
office so we can show them some data. It's the data that can back it up.
So you know, it's definitely one of those things. Like that's always everyone's kind of number one speed bump to get over.
Yeah.
Is, oh, interest rates are too high.
Yeah.
But how much? Just, let's say even like a 1% drop, you know, from 5 to 6%. Like, how much does that affect someone's monthly mortgage payment? You know, on just that small little difference. Because I think people put a lot of emphasis on that number. And they say like, oh, it's 6%. Like I want to wait for them to get to 5, but it's like getting it to 5 is only going to save you like,
exactly
$100 a month. You know what I mean?
Yeah.
So what? Just the difference between the two, like, you know, 5% and 6%, like what? I mean, I know you're not going to specifically, but
it's a great question.
Save people a ton of money, like people think it does.
It's a great question, and you know, at face value, it does save you money.
Right.
But we don't live in a one-dimensional world.
Right.
You know.
Right.
Story for this is in 2021, we had rates in the 3%. Okay. If you were trying to buy a house back then, I was helping a lot of people trying to buy a house, people that lost on their offers, first-time home buyers. Most first-time home buyers don't have extra cash. Right. They just come up with the minimum down, and they assumed that was all they needed until they spoke to us, and then we kind of set them on the right path. But that kind of market was, two things were happening. We had low interest rates, and we had low inventory. Yeah. So when everyone else was buying their second home or investment home, first-time home buyers couldn't compete on the market. Right. They were usually outbid between $30,000 to $50,000. Wow. Big numbers here. Yeah. So, okay, fast forward. They waited. The ones who didn't win waited. They decided, okay, we're not going to offer anything more here because we don't like that it's this hot. The market was hot. They waited for the following year. What happened in 2023? We had 5%. Yeah. In 2024, we had 6 and 7%. Right. In 2025, we had 7 and 6%. What happened to pricing? It hasn't gone down. Yeah. We've had 2 months of corrections that maybe changed the price to 10 and 15,000. Mm-hmm. It only lasted between October and November of 2025. Yeah. So now that they're trying to jump in the market, the interest rate is higher and the monthly and the price is higher. Right. So if you really did your comparison, buying a house at 300,000 at a 6.5%, or let's just do 5.5%, right? Buying the house at 300,000 with a 5.5%, and then waiting the year for it to drop to 4.5%, and you buy the house at 335, 350, your monthly is the same thing. Right. It's pretty darn close. Right. Yeah. So the point is that one of the biggest benefits of getting into real estate is what it does for you in terms of equity. Right. Right. So if you buy the house when things are going well, your equity is not really moving because you already bought the house at its peak. So you want to buy the house when not a lot of people are buying. You want to zig when people are zagging. Right. And then that's how you take advantage of that drastic price swing whenever rates do drop. Mm-hmm. So in savings, not a whole bunch because the price, the starting point of the price moves. Right. So maybe, if all things were the same, you probably save $200. Yeah. But likely the price is not the same. Right. Yeah. So that's why I like that. We ran 2-1 buy-downs, and those are temporary interest rate buy-downs. We can definitely get into a different episode. Yeah, right. But what it did for clients is it gave them next year's rate with this year's price, best of both worlds. Yeah. And they are way better off for it. Yeah, they're happy. Absolutely. Yeah, they're happy.
Nice. Mm-hmm. Okay. What is, so give us, I'm curious of this myself. Like, give us a scenario when it's just like, or give us a scenario where you've had to kind of work on a deal. I mean, obviously you can't give us names, and I get that. Yeah. But give us a scenario where it's like, these people want to buy a house, and it's just like everything's working against them. Like, what's one of like the toughest files that you've worked on? Oof. Well, I'm sure you've had more than one.
Oh yeah. And sometimes it's I've seen both. I've seen tough files where there's just not a lot of income to qualify. Yeah. I also have tough files where there's just too much debt and complexity to qualify. We're talking about tens of properties that we have to underwrite to qualify them. Right. Both sides, I would say, okay, we'll start with a first-time home buyer that really had no idea what was going on with credit. After high school, they went and got a car. They were in San Diego, got a nice little Challenger, and they went overseas. It didn't pay it off.
Yeah.
They something in collections. We're in year 5.
Yeah.
What happens? They have a 500, FICO score.
Yeah.
The good part, I've had a client like that. It was like a VA client.
Yeah.
VAs don't have FICO score requirements, but their interest rate really depends on where their FICO score. And if you want a good monthly payment, and it has to make sense for you, you have to work on credit. Okay. We've done several things. I've had clients go on a credit journey. We call it credit journey. a 2-year credit journey. Yeah, all paid for. And we went creative. There's things that you can do for free. You don't have to pay. You don't always have to go take out a new credit card to rebuild credit. Yeah. We'll start from the top. The 3 things that are building credit, your FICO scores, is payment history, age of the credit, and utilization. Last one, utilization. What does that mean? That means if you have a $10,000 credit card limit and you're at $9,995, you are not helping your score.
Right.
You are hurting your score.
Right.
So we have to figure out ways to do it. And obviously, when you think about it, it takes time because credit history needs to build. Yeah. The age of credit needs to build. The utilization you can handle today if you can. But yeah, we went on some credit journeys. We talked about an authorized user account. Now, this is mom and dad trick here, where, when you're in high school, sometimes a lot of kids these days, and this is financial literacy important, is that their parents put them on the credit card as an authorized user. Maybe they even had a card of their own, kids these days. And when they graduate high school, they have the same score as their parents without even establishing anything for themselves, really. Yeah. That's what you call an authorized user account. Okay. And I've had a client that went from a 580 score, and in 6 months, jumped to 760 score. Wow. Because that authorized user that added onto their account had that same score. Okay. Yeah. So you also have to put in actual history here. So that's a nice little trick that you don't pay anything, but like Experian Credit Boost, that's a free service you can use. That's essentially self-reporting. So we put them on self-reporting. I had them report phone bill because people hardly miss their phone bill. Right. Right. Most people don't miss their electric bill too. That's important. We need to charge the phones that we're paying for too. Right. And then like Netflix, something cheap. Okay. And after 2 years, they're in the high 7s. Yeah. High 7s, yeah. Okay. So that was one thing that was like, okay, challenging. Okay, how do we get that part? It took a while though, because it takes some time. And then on the other side was like a high value client, someone who has a lot of businesses or a lot of properties that when they're trying to buy, we have to help underwrite that. And remember how the bank, I said, is going to scrutinize everything? They do scrutinize everything. Right. So helping them kind of manage those things, but also like being local, being in town, being able to know the partners here. And I know their title agents. I know their agent who work here. I know their banker. Yeah. We were able to put that whole profile together, the approval together, a lot faster than anyone over the phone from New York can do, So I think working with clients, educating clients, giving them the right tools, help with credit, but also partnering, communicating, and establishing our partnerships and people around the area also help clients. So I think the best of both worlds. There's one of the challenges that we have to do.
So is there much of a difference? And I know people always kind of say like, oh, well, I went online to whatever the website's called. I don't remember the name of it, but I went on the website and I got pre-qualified and, they qualified me for this much. And then it's like they talk to a lender in the town that they live in and that lender gets them qualified for more. Like, is there a difference between what you guys do in your office and what someone can just get online and do themselves?
So I think that's where the confusion really starts, is how, what's the terminology? What is a pre-qualification or a pre-approval? Right. And honestly, between different, and these people I respect, they have different definitions of them. Right. That's why when you go to, if you ever brought a letter to an agent in town and they don't know where that letter came from, they're going to be skeptical. Yeah. Because it's so easy to go on, I can get on my phone on rocketmortgage.com and get an approval like in 10 minutes. Yeah. They're not going to run my credit. It's just going to be a soft approval, a pre-qualification. What we do differently is we don't want to start by taking all your information, running your numbers, here's your bill, you can qualify, you can't qualify. That's not really what we want to do. We want to start off with how can we help you? What's your goal?
Right.
Because we can figure out whether or not with the pre-qualification, whether or not we can hit that goal. We can help you reach that, and that starts off with just that conversation of income, history, rental income, all that stuff. Are you well positioned to actually go through an approval?
Right.
Because FICO scores are important for qualifying, and if you pull your FICO score, you're going to hurt your score a little bit. So we want to make sure at least we have one foot in the door and ready to move, and that you're actually ready. So the next step was the pre-approval part. So that's where we actually do a soft credit check.
Okay.
The reason why we do a soft one is obvious, because we don't want to hurt your credit score. But two, it stops all the not collection calls, the marketing calls. Because once upon a time, credit companies would sell your information once they know, or credit bureau companies would sell your information once they know you're trying to buy a house.
Yeah.
Yeah, so we want to run all that steps and run your credit and look at VOEs, look at W-2s, actually underwrite and look at your bank statements to make sure that there's nothing in your way to get qualified. Because we're essentially a coach.
Right.
Yeah, I'm there to coach you up.
Right.
I'm there to show you what are the pitfalls, what stuff you should do, what stuff you shouldn't do, and how to get there.
Don't go buy a car.
Don't go buy.
Don't go buy a car.
Yeah.
Yes.
That's a great one. Top of the list, that one.
It's I bring that up in a joking way, but I literally was talking to somebody the other day, and they were like, "Yeah, I want to buy a house," and I was like, "Okay," and like I was, just kind of casually having a conversation with them, and like, they're like, "Yeah, I should qualify." They're like, "I just bought a I don't remember what kind. Oh, it was a Denali, like a GMC Denali," and I was like,
Nice.
"You're not gonna qualify." I was like, "Look, I'm gonna be honest with you right now. Like, you're not gonna qualify to buy a house. Like, if you literally," and I was like, "When did you buy it?" And they're like, "Oh, like 2 weeks ago." And I'm like,
That's like at least
Like-
either a rack or 2 racks for a month. I mean, if you can't qualify, but
they're like a brand new. It was like a 2026 Denali, and I was like, "Okay." And I was like, "Let's have this conversation in like a year or two." And I was like, "But I'm gonna tell you right now, you're not gonna qualify to buy a house. Like, I don't know any lender that's gonna be like, oh yeah, you just spent $100,000 on a car.
Yeah.
Let me give you $500,000 to buy a house." Like, it doesn't work that way.
Yeah.
And I don't, and as much as you want to help people and you want to educate people, it's like you try to educate people, but they're just gonna do what they want to do.
Yeah.
And it's a little frustrating, because you're just like, okay, well, we were on this credit journey, like you were saying, we were trying to get there, and it's like you go and do that, and then it's like we're back to square one now. So if you're looking to buy a house, like, don't go buy a car tomorrow. Like, just wait, talk to Francisco first, and then we'll go from there. It's definitely that is like the number one thing. Like, usually when I ask realtors, like, what's the first thing you tell a client? They're like, I tell them, don't go buy a car, and I'm like, yeah.
I still get calls like that all the time with clients already bought a house. They're like, "Are you sure I can buy the car now?" Like, because that's how much we were like prepping them. We had to really get them to understand, like, look, everything you do is gonna affect your financing for this. Yeah, bless their heart. They got it closed and everything, and I said, "You can go buy a car."
Yeah.
Now you can. Now after that, the bank's not gonna care what else you spend on. Just don't miss your payments.
Right. Just make sure you're making those payments.
Yeah, just don't miss your payments.
Awesome. Well, so we've kind of talked about lending, and we've talked about business and things like that. But something that I mean, obviously I'm passionate about, and it's close to my heart, and I know it's close to yours too, is family. So same thing that I asked the girls on the last podcast, how do you find the balance between work life, home life, date nights, doing things with the kids? Like, how do you find the balance in all of that stuff, and what's worked for you and what hasn't worked for you?
Good question. I'm not sure if I could call the act a balance. It's a show for sure.
Right.
Some weeks it's really like, some weeks will be all family. Some weeks will all work.
Yeah.
And especially in our kind of market, actually in our industry, it's always going to be ups and downs with this market.
Right.
You're going to have some peak times where you just have, your phone won't stop ringing.
Yep.
And you'll have some times when you're like wondering, who should I call next? Like, what's going on? I would say the key for me on a work-life balance is being flexible with work so that I can be flexible with my family too. So I say that with, it's not like I have an exact schedule. Like I'm going to be in the office from this hour to this hour. You know, for the most part, you have to do that. You have to establish a routine for yourself, and you also have to be present to be able to help people.
Right.
You know, so I would say I dedicate sometimes for, and the wife works a lot too. You know, she short kicks Merced out there. A little shout out. She's busy every weekend.
I'm sure.
So we're like a weekend working family.
Yeah.
That's what I would say.
Yeah.
You know, on Fridays, Saturdays, open houses for me, cakes for her.
Yeah.
Saturday nights we'll probably do something. We'll if it's free. We like to go to church. We're a church-going family. We'll do either Saturday night, go to dinner.
Nice.
Sundays is everything for the girls. Like you guys want to go to town,
Right.
you guys want to go to the park, you guys want to go to the lake. You know, and I think also putting some time aside to do things, experiences,
Right.
honestly is the most, because in today's age, you can't get away from being online. So you have to unplug by plugging in
Right.
things to do. And that's what we've done is, I think, I'm never off.
Yeah.
I'm never off. But
Same.
yeah, but I keep it flexible. Like if I go on a work trip, we're going to Vegas for a conference on August. I'm bringing them along with me because they're going to be there at least for the full weekend.
Right.
So we fit in what we can. You know, we do the best we can.
Absolutely.
With that. Yeah.
For sure. So you're originally from Guam.
Saipan. Near Guam, though.
Okay.
Yeah, happy to talk about that.
So yeah, for sure. And those of you that don't know, you know, there was just a really big typhoon that hit there, kind of devastated that region. So if you have it in your heart and you're able to find a way to donate and help the people there,
Appreciate that.
It's a tragedy. I mean, everything that's going on right there now. So definitely, like I said, if you have it in your heart and you have the finances to do it, find a way to donate and help everybody out in that region for sure.
Thank you.
But what was it like growing up in that area? Like when did you move? Yeah, when did you move here and all of that?
Yeah. So a little backstory. You know, let's go all the way back.
Way back.
Way back. So out of high school, I went. I'm from a little island called Saipan, Saipan. It's the capital city in a long archipelago, maybe 3 in the Northern Mariana Islands.
Okay.
3 of it which are really populated. Very, very great community. It's a lot like Merced. Honestly, that's probably why I like it here so much. It's a close-knit community.
Yeah.
So we grew up, you know, knowing almost everyone on the island. You know. Close-knit community. They take care of their own. There wasn't a single homeless person when I was growing up. Yeah. Now it's a little different. Yeah. But back then it wasn't. And in 2008, graduated high school. You know, most of us have to get out. We come out to the West Coast because it's a U.S. territory. We want to either go to school, go to work, or go to the military. You know, I was kind of in between. Yeah. And I wanted to go to the military, but my mom said, you know what, let me send you to Texas real quick, and let me see if you like it before you like civilian life or you want to go into the military.
Right.
Said,
what branch did you want to go into?
Marine.
Okay.
I was going to be Marine, yeah. I actually had the papers already at my dad's, you know, from my dad. And it happened because I went to Texas and I was living with grandma, you know, enjoying the after high school civilian life. And then me and Hannah, we found out we're pregnant.
Okay.
So after Texas, I was moving around working little odd jobs. I was in Houston, shout out Houston, and then I went out to Florida, Fort Lauderdale, which I feel like we have a lot of connection because I know your mom's got people over there. Yeah. It was fun. It was a great place. Stayed there just for a couple months. Enjoyed the weather, but it's just so far. You know, we like to travel back home. Yep. And then, my wife, my girlfriend, wife now, actually got accepted to UC Merced. Oh, okay. And that was my ticket to California. Yeah. And I did not expect California to look like this at first because I have only seen stuff on TV. So when I flew in through Sacramento, they let me take an Amtrak down. I went through Stockton. I was like, where am I going? and then we stopped here, and I was like, oh, it's a farm town. I didn't realize that, and honestly, like that's why I love this place. I love the feel, the tight, the close, the community feel for it. I like what we're built off of that. You know, a lot of people here work with their hands. A lot of people take care of the land. Absolutely. There's a whole different culture or a feeling of community when you have people that are like that. Absolutely. And the people are great. So yeah, that was in 2009, and we've been here since.
Okay.
So 17 years as a Central Valley Mercedian. Yeah. So
It's funny that you say that, like, oh, I didn't know California looked like that, because
yeah,
growing up, like I said, I was born in Texas, in El Paso.
yeah,
And then we moved to Oklahoma for a while. My dad was working for the prison system,
yeah,
and he moved here to work at the penitentiary.
yeah.
And we were kind of the same thing. Like, we were like, oh, like, we're moving to California, and it's like
You're thinking like
there-
boardwalk.
there's gonna be a beach across the street, and
Yeah.
you know what I mean. And then
Yeah.
it's like you get here, and you're just like, this is California? Like, are you sure? And I'm like, you guys took us somewhere else. This isn't California. They're like, no, this is, this is Merced. And I've been here since 2000, 2001. And it's kind of been the same thing. Everybody that I graduated with is like, oh, you got to move out of Merced and experience this and experience that. But it's like, you know, for me, all of my immediate family is here.
Yeah.
So it's like, why am I going to leave that?
Yeah,
It's if anybody knows me, you know how tight I am with my family. So it's like everybody's here. So it's like if I'm going to leave and I'm going to go somewhere else, like I know I'm just going to be miserable because I'm not going to be able to see them all the time.
Yeah,
I'm not going to be able to see my sisters and my nieces and nephews and my parents and all of that. So, it's and I feel like Merced, like with any town, it's what you make it. If you're gonna just be here and you're not gonna be doing anything, then yeah, you're probably not gonna like it. But you got to find a way to make a living for yourself and have fun and all that. And I I definitely do that. I definitely do that.
Cheers to that.
I spread myself pretty thin sometimes, but it is what it is. So, but that's awesome.
Like there's a lot of people that move out of the Marianas, so type in.
Yeah.
And we always joke around like that Merced is kind of like our secret. It's our hidden secret. Most people go to Long Beach. Most people go to Hayward. Most people go to Portland, Washington, Idaho, Texas, Arizona, right? But really, we're glad that we have Cali here for our family because we're kind of blessed to be in a place that one has a lot going for us.
Right.
We have the UC, you have the Castle complex. Everything is really going in the right direction, and proximity-wise, we are just far enough to stay sane.
Right.
Right. If I was any closer to the city,
I get it.
it'd be hard to catch me on a Sunday here.
Yeah.
Yeah. So it's kind of a best of both worlds.
Yeah,
so.
Absolutely.
Yeah,
Awesome.
Yeah.
Well, Francisco, I want to thank you for coming on to the podcast. I want to thank you for being here, for sharing your knowledge, sharing your wisdom. I want to close out our session with some rapid fire questions.
All right.
So I'm going to try to keep them not work related. I'll keep them a little fun so the viewers get to know you some. So, coffee or tea?
Coffee for the most part, but I'm starting to convert, man.
Okay.
I think it's the age and it's my tea's great.
Yeah.
Tea time.
Yeah. No, I hear you.
But coffee.
Okay.
Coffee's the first choice.
Early bird or night owl?
I am by default I'm early bird.
Okay.
Yeah, but with having kids and and working weird times, I've end up being a night owl too.
Yeah.
So if I had the choice, I would probably be an early bird.
Okay.
Yeah, but I like to have fun too.
Yeah. Okay. Vacation in the U.S. or foreign destination?
That's a good one. For right now, I would say U.S. still because there's still a lot of places we haven't seen.
Right.
I haven't seen New York. We haven't been anywhere in the Midwest. I think I flew over Chicago once.
Yeah.
For now, I think that would be the immediate. But yes, I definitely would be. It'll be international after that.
Okay.
I want to see Europe. I want to see those places there. I'm a big history buff, so if I could see some old buildings and historical stuff,
Absolutely.
I'd be a kid in candy store.
Okay. Do you like to plan things or do you like to be spontaneous?
I am a planner.
Okay.
I am a planner. You should see my scheduler. I micromanage myself. I micromanage my micromanaged self. Yeah, if I can't function if I don't do it.
No, I hear you.
Because I am a free spirit.
Yeah.
But we have work to do, so I have to really sit down. So I like to plan things out. Yeah.
Is Hannah the same way?
No, she's a free spirit.
See,
Yeah.
It's always every relationship is like that because
Yeah.
you know, my wife and I, Amanda, like
Yeah.
that's how we are. It's
Yeah.
like I have to plan things out, and I'm
Yeah.
like I have a schedule.
She'll just let it go.
And
She's
it's
like,
you know, it's funny enough, we went to
Jesus,
New
take the
York.
wheel.
Like we went to New York a couple years ago,
Yeah.
and we took the girls, and it was like everything was planned.
Yeah.
You know, I had to plan everything.
my
I'm
day
like,
here.
I'm like, this is the time our flight gets there. Like
Yeah.
the car picks us up at this time. We're gonna do this. We're gonna do that. And then it's like I'm packing, and then it's like the day before we're leaving, and she's like, oh, I need to go pack, and I'm like, you haven't packed, and I'm like I felt my anxiety level, and I'm like, you have to go pack right now, like
I'm
you know.
dead.
So it's I'm definitely the same way. So I feel like every relationship has got to have one of both.
There's got to be somebody.
I feel like that's the only way to balance things out. 'Cause
Yeah.
if it's like you have two planners, you guys are gonna drive each other crazy.
For real. I mean, you guys would just be planning against each other.
Right.
Someone's need to be on the passenger side is a co-pilot.
Exactly.
That can keep their cool.
Exactly.
And then as a pilot, I'll lose my cool sometimes,
Yeah.
but it just keep me in place.
Yeah, exactly.
Yeah,
I get it. Okay. Biggest pet peeve.
Oof. Work-wise, I'm a clean freak. So to me, it's like, and honestly, that it all comes from my upbringing. Like we grew up with where my mom working, my dad working, so they would rely on us a lot.
Yeah.
Myself as a middle child, my older one got lucky. He was, you know, he had everything.
Yeah.
You know, he could just do whatever he wanted. But I was very much leaned on to take care of the house, to do things around the house. So I'm very much a clean freak.
Okay.
About, you know, keeping everything, because to me it's easier to manage your life if you know where everything's at.
Yeah.
You know,
Yeah.
if I don't know where anything's at, I have to stop and then I have to do this. So
Okay.
that's going to be for life. But pet peeve professionally is when clients or agents or people that I work with just can't seem to get out of their own way.
Right.
That's hard.
Yeah.
Because there's so much I can do to help you guys, so much I do to, you know, kind of point in the right direction. But if you can't get out of your own way, yeah, it's tough. And it sucks because you want to help so bad.
Yeah.
You want to help so bad.
Yeah.
You know.
Absolutely. Okay. All right. Last one. Do you have any secret talents?
Secret talents.
Yeah.
I'm actually, I do.
Okay.
Yeah.
Be careful what you say.
Because yeah.
I'm gonna make you do it. No, I'm just kidding. I'm not gonna make you do it. No. Do you have any secret talents?
I guess I just like, I'm a very competitive person. I like to play sports. I like all sorts of games. I'm pretty mean at ping pong. I discovered that last summer when I went over to Arizona and played with my nephews and brother. And
Nice.
turns out I was killer.
Nice.
Yeah.
Okay. So last question of the day. It's not a rapid fire question, but last question of the day.
Yeah.
What is a goal that you have set for yourself personally?
Personally?
For this year, and how do you plan on accomplishing that?
Okay, good question. Well, last year, you heard, we opened up our branch, NEXA Mortgage Merced, and it went through a whole year of success, trials, tribulations, you name it. This year, I wanted to really pinpoint what part of my process business, myself, I would like to improve on. And that's exactly what I wanted to improve on. Because when it really comes to how we help clients, it's about education.
Yeah.
And learning about managing a 30-year mortgage or learning about programs like that, it doesn't happen overnight.
Right.
So what I found is that the more time I spent having meaningful conversation with the client, you know, next level things, something that you would talk to, like, you know, you go into school, right? Or let's just say you played basketball. The first year you join the team, they introduce you to the kind of style they play, right? Not really the plays, like really what the style is. Like, you know, are you guys going to be like a Phil Jackson kind of defense or something like that? So that's the part that I'm trying to improve on.
Okay.
I want to improve on getting that first level communication down.
Okay.
So you don't have to worry about the little things. Like, don't worry about how to fill up an application.
Yeah.
That's the last thing we should worry about. We should worry about how we have to set yourself up to get that program that's going to help you succeed.
Right.
And that's the next level conversation. So that leads to my goal of really building that process out so that I can spend more quality time with clients talking about important things.
Okay.
And that's like, I want to look like a one and like you just get in there, get all that stuff done, e-sign thing. You don't have to worry about things, so we can actually just talk about meaningful things. Yeah,
nice.
That's my goal.
Nice, nice, awesome. Well, I want to thank you again for stopping by. It was fun. It was a great time.
Good time.
I want to thank all of you guys again for tuning in to Cocktails and Closings. I want, please go subscribe to the channel. I'm going to be posting things, try to every couple weeks I'm going to be posting podcasts and posting episodes. So please make sure that you go and subscribe to the channel. I will tag Francisco Guerrero and NEXA Mortgage in this post. And as always, in closing, guys, it's a good day to have a good day. So I want to thank everybody again for tuning in. Until next time.